Good morning and thank you for joining us on Thriving on the Suncoast. Like many of life's realities, the issues surrounding long-term care and the need to be prepared to deal with them are often something people prefer not to think about. Having a plan in place to address these situations can go a long way to easing some of the related concerns. Sometimes an event that warrants long-term care can come about out of the blue, and sometimes it's gradual. No matter the circumstances, a loved one's need for long-term care can create emotional, financial, and career implications that extend far beyond the immediate care situation. Recipients are getting younger. In 2015, more care recipients are below the age of 65 as compared to 2010. 81% of care participants were age 65 and older in 2010, while only 60% of care recipients were 65 or older in 2015. Among people turning 65 today, 69% will need some form of long-term care, whether in the community or in a residential care facility. Although caregivers appreciate the opportunity to care for their loved ones, and they're often proud to be able to do so, many report that their personal health and their well-being is often negatively affected, and the stresses of the situation impact their relationships with their family as well as with their friends. Let me share some statistics on this. 43% of caregivers said that the long-term care event negatively affected their health and their well-being. As a result of caregiving, 51% of caregivers worry about the lack of time for themselves and their families. 43% of caregivers said that the long-term care event negatively affected their personal health and well-being. 41% of caregivers experience negative physical side effects such as depression, and nearly a third of caregivers report an extremely high level of stress, and 55% of caregivers did not feel qualified to actually provide the physical care. Caregivers report spending about 20 hours a week providing care for their loved one. In fact, 77% of caregivers indicated that they had missed work in order to provide care for a loved one. Caregivers miss an average of 7 hours of work a week, almost 18% of a 40-hour work week. Here to share some insights into the long-term care industry is 27-year veteran in the insurance business, Jeffrey Nixie. Jeffrey is a certified life underwriter, a chartered financial consultant, a certified long-term care consultant, and is president of his own firm, Accurate Benefit Solutions, based in Sarasota. Jeff works as a broker, meaning he can shop various companies and tailor a plan to meet your specific needs. Welcome to the show, Jeffrey. Sorry for all that statistical information, but I think it's very relative because, you know, in our home care business, we see people all the time that wish that they had a long-term care policy for, obviously, to be able to afford as much care as they want, and also they wouldn't feel as guilty if they knew that the care was being provided and they didn't feel like the need to have to go and do it themselves.
Sure, Michael. It's a serious concern that people don't want to think about the importance of needing help as they age. Medicine, the drugs out there, the likelihood of living a long time today is medicine's gone a long way. So with getting older and living a long time, a lot of times your body starts wearing out and you need assistance like your services.
So you kind of have that double whammy. People are living longer, so at the elder ages that they usually find that they do need some assistance, but the statistics also show that there's a lot of people under age 65, and I think a lot of that's due to accidents and other unforeseen situations.
Sure, and you have cancers, and you have Parkinson's, and you have MS, and a lot of those are...
So what's been happening insurance-wise, for policies, over the years? I know a lot has changed.
Initially, they came out with individual policies that you could buy so many years of coverage. You'd have a waiting period, and it would pay out so much per day. And the premiums the policies were sold that the premiums were projected to stay level. The problem happened that when they started out initially, they didn't have enough of the statistics of people using the product, and therefore they underpriced it because people kept the policies, they didn't have the lapse ratios, and then of course the financial meltdown where the insurance companies weren't getting the return on their money and higher claims than they expected.
So when somebody comes to you and they're concerned about, the long-term care needs either for a loved one or for themselves even, and obviously people should be looking at this in their 50s because it's cheaper, how do you start assessing the need for them?
It's a planning process. We try to get people talking about, the first thing is, if something goes wrong, what would you like to see happen? Do you want to have help at home? I suggest people go out and they look at what facilities are available, what's out in the marketplace, to get an idea, not only of costs, but if they went to assisted living facility, would they like to go there or would they like to stay in their home? Do they expect the child's going to help them? Many times they expect the spouse is going to help them, and you have to keep in mind, if they're both now 80 years old, it's very difficult for the spouse also.
Yeah, and I know that years ago it used to be just nursing home care, but now, because most people do want to stay in their own home, all the policies typically provide for home care benefits.
Correct.
Now Medicare doesn't cover, people have a misunderstanding about what Medicare pays for, don't they?
Medicare is very limited. You have to meet certain qualifications. You have to spend a couple of days in the hospital and then be transferred directly to a rehab facility. And again, if you get somebody who is older and they just have issues, either dementia related or it's a condition because they're older and rehab is not going to help them, the Medicare is not going to pay.
And it doesn't really, it pays for some services in the home, but it doesn't pay for long-term care services.
Correct.
It only pays for short-skilled visits, is that right?
That's correct.
Yeah. So people really do need to plan on their own for, so once they kind of have an idea of what it's going to cost, then what?
Look at the assets and you sit and you decide. I mean, if you're looking at your assets, if you're paying the bill, it's 100% on your back. You're fully self-insuring. If you look to an insurance company, you're paying either premiums or you're transferring some assets, and how much leverage will the insurance company give you?
Thank you, Jeff. We have to go to break. Check out our sponsors. When we get back, find out how you and when you should buy long-term care insurance. Stay with us.
Is Mom really taking her medications?
A Comfort Keeper can ensure that your loved one gets their medications on time, providing peace of mind for families in need of flexible in-home care. Comfort Keepers, let our family take care of yours.
When a stroke or injury impacts your life, we're here to help you get it back. With our dedicated team of specialists, personalized treatment plans, the most inventive technologies, and a coordinated approach to recovery. This is more than just rehabilitation. This is a higher level of care.
Let's face it, life happens, and the laws change daily. Attorney Joseph Len can help guide you with legal issues you may face while aging. Len Law has helped countless clients in Sarasota and Port Charlotte in assistance with guardianships, Medicaid planning, VA planning, estate planning, wills and trusts, probate, and Social Security disability claims.
I'm elder law attorney Joseph Len. At Len Law, seniors matter. Your rights matter. And the legacy that you built matters.
The Harvey Center for Integrative Medicine is helping people every day to thrive and live healthy, vital lives. Our integrative approach combines conventional medicine with holistic and innovative therapies to help you achieve optimal function. Are you ready to function at 100% of your ability? Dr. Fred Harvey customizes tools and treatments to achieve optimal wellness at any age.
Hi, I'm Dr. Fred Harvey. Do you want to feel vital, vibrant, and fully energized? If so, call our office to find out how.
Hey, welcome back. I'm here with Jeff Nixie. We're talking about long-term care insurance. Jeff's a 27-year veteran in the field. Jeff, we were talking about the steps to determine what kind of policy people might want to use. Once they've determined what it might cost to stay in their home, or assisted living, and then what their assets look like, then where do you go from there?
You look at two different things. You have a traditional product, which is just pure insurance, and now they have a second product, which is tied in with life insurance long-term care. The big concern that people had was that they were paying all of these premiums, and what if they never used it? If it's the long-term care is on a life insurance chassis, you get either or. You're going to have if you pass away, there's a death benefit, a tax-free death benefit paid out.
Let's talk about some of the different policies. I'm going to take a step back for a second. Maybe just describe the components of a long-term care policy, the decisions that people have to make when they're considering it.
Okay, the first thing is you have a waiting period before benefits are paid. And depending upon the company, sometimes you'll have a 0-day waiting period for home care and a 90-day waiting period for in an assisted living or a long-term or in a convalescent home. And then the second thing is, how much money do you need on a daily benefit or monthly benefit to supplement the costs? And in many cases, what I'm looking at is how much assets do you have, and I want to see your assets stay level. And yes, you are paying some of the cost, but the insurance company is picking up usually 50% of it or more.
So you have to determine, your daily benefit, and there's also a waiting period before it kicks in.
Correct, and then there's also a maximum period,
Okay.
which the maximum now is up to 6 years. There is one company left that does a lifetime benefit.
Really?
It's on a life chassis, and the way the life insurance works, it pays a percentage of the face amount of the policy, and then if you use up all of those benefits, you will then go directly. They have a rider that's going to continue the same benefits for as long as you need them.
So they've gotten very creative with the policies and not just paying for the long-term care, as you said. If people were concerned, well, what if I didn't use it? And now they've combined them with life policies and annuities and things like that.
Correct. The life policies, they're guaranteed premiums, so people like that, there are no surprises. And also, yes, there are annuities, and the annuities usually offer people an option if they've been turned down on the life side. So, granted, they're not going to buy into a claim, but they will look at those options.
So when somebody goes to file a claim, what is the insurance company looking for?
They're actually looking for, what does the doctor have to go and say about the person? It's usually a pretty straightforward situation. I mean, if it's dementia related, and then if it's not being able to do 2 of the 6 functions of daily living, and let's say the person has had incidents of falling already, that's usually a good indicator. And then, of course, restriction in movement as people are getting older.
You mentioned the 2 activities of daily living. I'm going to explain that a little bit more. Help with feeding, dressing, toileting, transferring, bathing. So 2 of those, that's what the insurance when we help somebody qualify for home care, we're looking to see if they need help with 2 of those, at least 2 of those. And it's important, the definitions in the policy. Every policy is written a little different, isn't it?
Correct. Well, actually, the policies, they do look similar in that regard as far as what's qualifying them.
Yeah.
I
know that some say standby assistance and some say substantial hands-on care. So I think that's something that people should really look for in the policy, because one is a lot more lenient than the other, and it's easier to qualify people for the leniency of just being able to do standby assistance, because you can usually say, you're helping somebody get dressed. Maybe they can't bend over and tie their shoes. It could be as simple as that. So I know from our perspective, we help work with the client and make sure that, when a lot of times a care manager comes out and assesses the client for the insurance company to see if they meet the need. And they oftentimes do need to understand what the insurance company is looking for. A lot of times we have clients that just say, "Oh, I'm fine, I can do everything." And like, no, yeah, okay, that's not really going to help you qualify for the policy. And it's not in reality the truth. They're just kind of sugarcoating it because they don't like to complain. So a lot of times they need a little help with that. So at what age should somebody start looking at policies?
I would start looking in your early 50s. I say the right time to buy it is when you have the cash flow to pay for it, and the insurance company will give it to you. If you push it off, between 50 and 60, there's like 18% of the people are declined because they've already had a medical problem that's going to increase their likelihood of needing long-term care, and the insurance companies won't take them. Between 60 and 70, it's increased to 25% are declined. So again, the important thing is to get it when they're going to give it to you. And
so they've gotten very tough on underwriting because they've had so many claims, I guess.
Sure,
Yeah.
sure. And a lot of times it's back related, or if somebody has fallen, or mini strokes. That's usually
If somebody has that,
if somebody's had a mini stroke, that's usually no one wants to take them. Hard to get coverage.
yeah. So, and it's also a lot cheaper when you apply, obviously, when you're younger.
Correct.
Yeah. So, if somebody has a policy, when should they look at filing a claim?
As soon as they realize they have a chronic problem that's going to continue over time. And the reason they want to file the claim as soon as possible is that the policies have a waiver of premium, so they'll stop paying premiums once they're approved. And secondly, you don't know how long the insured's going to live, and even if the policy is only going to pay out for 2 or 3 years, it's good to get it started. It's only going to pay that maximum amount and get it started as soon as possible.
Go to break, check out our sponsors. We'll be back learning how to utilize a long-term care policy. Stay with us.
The Harvey Center for Integrative Medicine is helping people every day to thrive and live healthy, vital lives. Our integrative approach combines conventional medicine with holistic and innovative therapies to help you achieve optimal function. Are you ready to function at 100% of your ability? Dr. Fred Harvey customizes tools and treatments to achieve optimal wellness at any age.
Hi, I'm Dr. Fred Harvey. Do you want to feel vital, vibrant, and fully energized? If so, call our office to find out how.
With the help of Comfort Keepers, I'm keeping my mom healthy.
I'm keeping Dad on schedule.
I'm keeping my mom happy.
Comfort Keepers in-home professional caregivers can provide meal planning and preparation, health and wellness services, and personal care services through custom care plans that can change as needs change, so your aging loved ones can stay happy and healthy in their own home.
Comfort Keepers, keeping the comfort of home.
Let's face it, life happens, and the laws change daily. Attorney Joseph Land can help guide you with legal issues you may face while aging. Len Law has helped countless clients in Sarasota and Port Charlotte in assistance with guardianships, Medicaid planning, VA planning, estate planning, wills and trusts, probate, and Social Security disability claims.
I'm elder law attorney Joseph Land. At Len Law, seniors matter. Your rights matter. And the legacy that you built matters.
Hey, welcome back. I'm here with Jeff Nixie. We're talking about long-term care insurance and long-term care planning needs. Jeff's an expert at that. Jeff, we talked about rates have been going up. We talked about the fact that, some people can't qualify if they've already got a health problem. We've talked about some of the benefits of how a policy works. People are potentially reluctant to buy insurance because they may not perceive the need that they're going to need it, even though statistics bear out that a large percentage of people are going to need some kind of care. And it gives people that independence of deciding whether they want to be able to stay in their home, whether they want to go to assisted living, but at least they now have control over that. And we find that in home care, if people are getting less than 8 hours a day, it's less expensive to stay home. If they're not going to use the premium, let's say that they live a long time, there's people that have paid into these things for 10, 15 years, there's some newer policies that address some creativity on how to handle payments, and if you have I know there's a lump sum option. Can you explain that?
Sure. With a life insurance policy, you can do a single premium or a 10-pay policy, and use the single premium as an example. If you put $100,000 in, then you're going to get a multiplier of that for long-term care insurance. You have some policies that will cover both the husband and wife, so it's a second to die long-term care policy. And the way it would work is that it's paying 2 to 4% of the face amount of the policy. And if you ran through the death benefit, you then could have a rider that's going to cover the balance. And you will have and God forbid you're both traveling and passed away, you'll have a tax-free death benefit.
So if you don't, so with a single premium, you put on a lump sum, and there's a death benefit if you die, and you can also use it. So it's like insurance, like life insurance, but then you can also use it for disability payment, long-term care payments.
Correct.
I think that's very cool.
Yeah, and you know, again, keep in mind the money that's coming out of this, you're not paying any tax on it. So if there's, if you put $100,000 in and you have $300,000 of benefits, and it's the full amount is paid out, you're not paying any tax on that $300,000.
Well, that's important. Tax-free benefits are always good. Are there, I understand years ago they changed some of the tax laws on how tax deductibility of policies work.
With the individual policies, you can write off premiums 100% in a C corporation. If you have an LLC or S corporation and the like, you can write off a portion of the premiums. It is restricted to government guidelines. And then on this, if a person doesn't have a business and they're meeting their medical expenses go above 7.5% of the adjusted gross income, you can write off 100% of it.
So there are tax benefits of, and you should check with your CPA, because I believe that some long-term care payments to even to home care can be deductible under the right situation. Tell us a little bit about some examples maybe of some folks that you've worked with and how it's helped them.
Sure. You know, I guess I like to see it as independence care. I had one client, and the woman had osteoporosis and Parkinson's, and she was in pain all the time. And having the long-term care insurance, she needed help. Her husband helped for a while, but then he just said, you know, I'm too old, I just can't do this. And so it was a relief for both of them. And it really helped her enjoy her final years of life, and to have the independence and have somebody come and help her along. And then I had another case, actually I had a brother who had some serious problems. And you know, in his case, he was younger. He was under 60, but on his life insurance. And this is an important thing. You know, people don't, yes, when you die, you look at your life insurance, but you should look at your life insurance beforehand. There's additional benefits. In his case, his life insurance were paid because he was disabled, and he did burn through most of his assets, but the life insurance was still available to go to his daughter when he passed.
So it sounds like you really need to look at, you know, the whole picture. You should never just buy a policy, you know, in a vacuum. You should look at how the other policies fit into everything that you've got going on. It's like a holistic approach to financial planning.
Oh, definitely. And you know, again, how much you're going to get from Social Security as you continue to age. You know, if you have a pension coming in, you know, how much money is that going to be? Or, you know, what is your estimate of income off of your investments? You take a look at that full picture, and then you want to make sure you're going to protect the spouse, that if God forbid the first person got sick, you don't burn through all the assets and you leave the spouse destitute.
A lot of people are veterans. Does the veterans, are there any benefits for long-term care under VA?
The VA does have a program, but it's restricted in the sense that you have to really spend down your assets to get some money. But that is an avenue that you would want to look at in your overall plan.
Yeah. I know that we have helped some veterans get some home care benefits, and there are a lot of restrictions on that, but we have an 800 number you can call and people can determine whether there's benefits available for them. So what age, is there a cutoff age where you can't get insurance anymore?
80 is the cutoff. And
for long-term care.
For long-term care.
But you might be able to get the single premium.
The single premium, and also the annuity is a very good option between 70 and 80, because the premiums are pretty substantial, because you've never put any money into the pot or paid to the insurance company, and therefore they're picking up a lot of immediate risk, and so the premiums are pretty dramatic.
Well, as I said before, I think having a good broker to really look at the big picture and plan the right policy, and having a good home care agency, because we look at the policies after the fact and determine when somebody should start putting in a claim, help them qualify for the claim. That's the big thing. So qualifying for the claim, and even doing the filings for them. We submit everything for them, so we make it very easy. Jeff, thanks for coming on the show. I hope it was informative. If you want to look at long-term care, give Jeff a call. And if you need some home care benefits, give Comfort Keepers a call. Have a great weekend. We'll see you again on Thriving on the Suncoast.
Comfort Keepers, Comfort Keepers, 'cause there's no place quite like home. Call Comfort Keepers.